All right, ladies and gentlemen, it's time for another end of day pulse wave report with yours truly, the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous Pulse Wave Price Trigger reports, complete with the rally and crash alerts. All right, we're going to do something just a little bit different today. We're going to take a look at the markets, but we're going to do it purely from an equity standpoint. We're going to look at equities today only because I want to show you a little something. Just a little experiment I'm going to conduct so you can get the hang of why I'm doing this, because it's going to lead to something else down the line in the days and weeks to come. All right. So in 2023, I'm going to teach you how to do this. All right. So without further delay, let's just jump right into it. All right. We're going to knock out the requests from our trading room first. All right. And right now you have a chart of S32 on the ASX. This goes out to my main man, Loco. What up? In the land down under. Let's knock this out for you. All right. So on S32 on the ASX exchange, this is South 32. You can see this market has started a rally, all right, off of its low points. We got two positive bot checks within a 2-week period, one here on December the 9th, and then again here on December the 30th, letting us know that money was starting to pour into this security. And what do you have here? You have liftoff. Now, you did gap up on January the 9th. So at some point, the market's going to need to back and fill that. But after that, this thing is wide open to the long side of the market. So in the meanwhile, you may want to go ahead and see if you can lock a little bit of profit therein. And then on this pullback to close this gap, that's when you would get back in on the long side and ride the new leg higher on S32. All right. Next one we got here is SVL, Silver Mines on the ASX in the land down under. All right. So this one, it wants to stage a rally, but for some odd reason, it just can't get off the ground yet. It's under heavy resistance at current price levels. So whenever this one can get up and go, that's when it'll be time to do something. But for right now, I would just wait. Go ahead and follow the report on your dashboard. The reports are out. If you go to PulseWaveTrading.com, you pull up your ASX securities and you will see the reports are ready on those. I would just follow the reports to a T and let those reports guide you therein. All right. Now, let's take a look at something else. All right. Got another request here, which is NVIDIA. Let's take a look at NVIDIA. Now, you can see that this one is trying to rally as well. Market prices got down to and touched the bottom of the Kumo cloud, threatening to fall outside of the cloud, only to move sideways and consolidate for a while, for about a week or so. And then finally we get liftoff and the market breaks outside of the Kumo cloud, and we finally get 2 consecutive closes outside of the Kumo cloud. So the next upside target, if the market can get going from a momentum standpoint, would be $190 a share. All right, that's where that is going to go. All right, $190 a share. That will be my next upside target for this one. All right, and that is NVIDIA, NVDA, for those that are looking for the ticker symbol for that security. All right, I have no idea. Golden Burks wants to know, where do they sell those carbon credits, the ESG? I have no idea All I know is the profits therein are going into the coffers of the elite, those that want to control the world. It's definitely not going into ours. All right, now let's take a look at, let's see, where's my next one here? Okay, Meta, that's the next request. All right, from the trading room. And as you can see here, this one unfortunately has a crash alert for tomorrow's trading. And we have a neutralization bar alert. All right, neutralization alert for Meta. So the market did break out top side of the Kumo cloud and rallied for a little bit, but now appears to have run out of steam. I think the market's just going to take a pause here, even though this is a crash alert bar. That means we are expecting downside. The top of the Kumo cloud is around $120. So this stock has the potential to drop 12 bucks. But I think whatever happens will be limited because of the neutralization bar that usually keeps prices moving sideways. All right, and not hitting any extremes. So we'll see if this neutralization bar is something to really take a note of, or is it going to fall off? Is this going to be a 1 day off, a one off? We'll see. But this crash alert you cannot ignore going into tomorrow's trading for Meta. All right, we'll wait and see if the market will confirm that crash alert. All right, and our final trading room request tonight is AMD Micro Devices, and that's Advanced Micro Devices. Okay, so here's a good example. The Advanced Micro Devices had a one-off on the neutralization bar on January the 6th. It was just a one-off because then the next day the market did explode higher from the rally alert. All right, you did not have a neutralization until after the initial push. Then the market moved sideways for 2 days, but this had already fell off, which it doesn't matter if the neutralization is on or not because you're in the Kumo cloud, so you're going to consolidate and move sideways anyway. So this one's still under the auspices of the rally alert. The bulls have still control of the market at this point. Bottom of the Kumo cloud is acting as the immediate support. Do we have a gap? Let's see here. Yeah, 64.30. And yep, you got a gap. So that means the market's going to have to fall out of the cloud temporarily, seal this gap before it attempts to go higher. If you can get a rally going here, a nice bear market rally like you did back here, the upside initial target would be around 80 bucks for AMD. All right, now let me go into what I want to show you guys tonight. So you've heard me say often that equity prices, for some odd reason, are better priced overall than their futures and forex and crypto counterparts because those markets tend to overshoot their targets a lot. Now, equities have their own negative in that they gap up and down a lot of gaps. You don't have those issues with forex and futures and crypto. So taking that into account, we're still going to look at these prices. That today being day one. So you're still under that alert status for the next 3 to 5 days on your bond prices. So keep that in mind. Next up, we're going to take a look at oil. Oil has a crash alert for tomorrow's trading in ticker OIH. And the top of the Kumo clouds, we'll call that 300. So possible pullback to the 300 handle. And that should hold if this rally is really going to get off the ground. You are topside the Kumo cloud, which is good. So the price action just needs to lift up out of there, and then we'll feel a lot better about it. Next up is the US dollar by way of ticker UUP. So you can see the market is still flat. We had a crash alert here on January the 9th, and the markets moved sideways for the 2 days following that. So we'll see what happens, but I'm expecting lower prices within the next 3 to 5 days, just like we got here in the last crash alert. We got this down move here, so expecting another one to come. I just don't see a rally in the U.S. dollar until we see a rally in the U.S. dollar. So once the market finds bottom, then we'll see what happens. But market's still bearish for now. Next up is the euro currency. All right, this is ticker FXE. This is the euro currency ETF that tracks the euro, just like the UUP tracks the US dollar. We had gap up here and we haven't back and filled yet. So this one still remains bullish, but we do need to back and fill on this gap here before the market can really continue to head higher. So that's what we're looking at here, but this one is still bullish while the US dollar is still looking bearish. Looking at the pound sterling by way of ticker FXB, this is the pound sterling ETF. So we got a positive bot check the other day here on January the 10th, and we did get some downside production. But usually when we get these bot checks, we expect, a pretty decent move in that direction. The last bot check we had was back here on December the 23rd, and we did get a move higher that followed. So we're expecting downside. We got support around the 115-ish level. So the bears are still in control of the pound sterling for now. Next up, we're going to take a look at Bitcoin by way of the ETF GBTC. Now, it's been tracking with the movement of Bitcoin pretty well. And we have a crash alert now in this particular one. But we do not have that in Bitcoin itself, on the futures for that. So this is an interesting chart. That's why I wanted to pull it up. It stopped short at the top of the Kumo cloud only to give us a sell signal for tomorrow's trading. Now, Bitcoin and Ethereum right now are rallying in the crypto market. So this divergence with the GBTC could be very eye-opening. So that's why I want to show you this. And it's looking like it's preparing to head lower. So is this up move that we're seeing in Bitcoin temporary? Is it just like a knee-jerk reaction? All I know is we got this crash alert and we can't ignore it. Now, the last one, to be fair, we didn't get any downside production. The market turned and reversed. So the fact that we're getting another one here after the rally is very concerning because we're still in a bear market. You see the red grizzly bear in the bottom right-hand corner. You're still in a bear market. And this bull run, this attempted bear market rally is over. It's dropped off. And now the bears are coming in. Very, 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 very interesting chart. Like I said, equities are 99.9999% of the time better priced than its derivative products. I know, and sometimes the equity ETF, they're a derivative of a derivative. So I can't explain it to you. I can only tell you how I see it. For some odd reason, the equities usually are better priced and usually signal the direction a lot more accurately than their counterparts. So take that for what it's worth, but it's saying that we could be headed down in Bitcoin. We're going to have to watch GBTC. Now we're going to do the same thing with Ethereum. This is the Grayscale Ethereum ETF. The ticker is ETHE. And it's also given us a crash alert with the price action moving down into the close. The market stopped short at the bottom of the Kumo cloud, and it's the same identical setup as the Bitcoin, the GBTC. This is very concerning, ladies and gentlemen, very concerning. Are we about to see a washout coming in the crypto market? This is something to think about. All right, so we looked at Bitcoin, we looked at Ethereum, but now just take a look at Litecoin, sticking with Grayscale. This is the Litecoin ETF. Now, the ticker on this one is LTCN. You'll notice we had a crash alert coming into today, and we didn't get any downside production yet. And the market stopped short at the top of the Kumo cloud, acting as resistance around that, we'll call it $3.30 mark. But the only difference or caveat in the Litecoin that is different than Ethereum and Bitcoin is we got this bullish pointer right here from January the 9th. This bullish pointer cannot be ignored either. So this is interesting. Very interesting. What is the market going to do about it? Is this going to act as a consolidation bar for a while and the market just moves sideways? Or is it going to fall first and then try to come back and rally, or attempt to rally and fail and then fall? I don't know, but we got this is just day one from the crash alert. So we got 4 more days coming. We'll see what happens, because these rally and crash alerts tend to lead the market 3 to 5 days out, unless there's consolidation where you have flip-floppage like back here, where you had, just total flip-floppage, rally, crash, crash, rally, crash, crash, rally, just flip-flopping all over the place because it's in the Kumo cloud of consolidation. So this is going to be very interesting to see what happens. We're getting these sell signals in the crypto space while the cryptos themselves are starting to rally. So very interesting. I had to point that out to you all. All right, let's move on. Now we're going to look at the NASDAQ 100 by way of the QQQ, or the cubes, as they used to call them back in the day. All right, so this one is starting to enter into the Kumo cloud. The top of the cloud is up here around the 285 mark. We're at 277 today. And the bulls are in control. The NASDAQ wants to run. We got this positive bot check back here on January the 6th, and we did get upside liftoff right after that. So once again, the indicator was deadly accurate, as it is the majority of the time. So we're getting liftoff. The question is, do we stall, or do we continue to run until we touch the top of the Kumo cloud? Or does it continue to run and break through the top of the Kumo cloud? These are all very good questions, and we will eventually get an answer. Looking at the S&P 500 by way of the ticker SPY, the market stopped short at the top of the Kumo cloud. Just stop, pause right there into the close. Bears are still in control of the S&P 500. So we're looking at the potential for rallies to get sold here. It just hasn't rallied yet, so you haven't seen any selling. So the question will be, how much further can the market go before it pulls back? That is the ultimate question. And as you can see here, we're still in red mode. Still in red mode. Very interesting charts, I have to tell you. What you're seeing, ladies and gentlemen, is the result of just meddling in these markets and an attempt at manipulation and control by the Federal Reserve. And it's gotten to the point where the markets don't even know what to do anymore. The market itself is confused. If you really want to be technically speaking, we haven't gone anywhere price-wise since August of last year. You're in the same spot you were back then. What does the Fed have to say for itself? Look at this. If I come down to this bar, so technically speaking, we are still trading, according to this bar here, we're still, we go all the way back to July. So since the summer, the markets haven't gone anywhere since the summer. They just give you the false sense that they have, but they really haven't. Isn't that something? We've technically just been in a wide trading range consolidation, no trends. All right, and this is your Russell, my hustle. It already stopped short at the top of the Kumo cloud. Does it have enough energy to push through, or is the market about to roll over? we're at a crossroads where technically any one of those things can happen. The market could just fall right here, and we say, okay, well, it's still in the trading range, or it can have an explosive rally tomorrow, and we could say, well, technically speaking, you're still inside of the trading range. So regardless of what the market does in the very short term will be very minuscule, but over the grand scheme of things, if it can break out of the trend, then we're doing something. But you're talking about a trend that has resistance at let's say 202 and support down at 162. So you got a $40 trading range in the IWM, and that's it. Market's not trending. New money is not being printed. It's just trading in the range. So we'll see if we can get a break out of this humdrum situation. Now the Dow itself. The Dow has been the easiest to manipulate for the Fed because you only have 30 stocks in there. You don't have, hundreds or thousands of stocks like the Russell and the NASDAQ and the S&P 500. So here's your Dow breaking out above the Kumo cloud, but the bears are still in control. We haven't officially flip-flopped on the momentum side. On the trend side, we have. All right, the long-term trend has changed, but the momentum has not. And that's why the market really hasn't gone anywhere. All right, so it's trying to do something, but this market is still pretty much consolidated in the grand scheme of things as well. Very interesting turn of events. You go from bearish to bullish, but you don't get the momentum to go behind it. Rallies are looking to get sold in the Dow. Taking a look now at our last two charts, gold and silver. Here's gold. Ticker GLD is giving us a crash alert, you guys, for tomorrow's trading. A crash alert. Say it ain't so. Say it ain't so. But that's what we got. According to this, the trend could be over. Are we going to enter into a Dow situation here where the trend has changed from bearish to bullish, but now we're about to lose the momentum behind it? So this is an interesting turn of events too. Again, this is gold. This is GLD. Can't ignore the crash alert that we have on our screen here. And then last but not least, here is silver by way of ticker SLV. Silver already had the crash alert and already is starting to head down. We had a crash alert coming into today and the market went down. Bears are really in control here and selling rallies. But we went from bearish to bullish in the trend, but we just lost the momentum. The momentum has come completely off now, the bullish momentum. Now, as long as the market's still in this uptrend, it can relock in at any time. And we really don't have a lot of commitment to the downside, but top of the Kumo cloud at $20 is definitely in play as long as this bearish momentum is still in play. All right, folks, that's what we're looking at right now. We're at a crossroads in a lot of these markets where things could pretty much go either way. They could go up or down, and at this point, it really doesn't even matter, unless it's some weirdness where the S&P rallies 1,000 points tomorrow. Anything short of that, it won't matter. One day is not going to change anything. We're going to need to see not just a new trajectory and momentum, but we're going to need for it to turn into something. And I mean trend changing environments. Markets need to start trending again, because if not, I think people are going to start just dumping and be like, this market ain't going any higher. I'm dumping. And then it becomes a self-fulfilling prophecy and everything implodes. So that's why you need PulseWaveTrading.com. Go to PulseWaveTrading.com. Sign up for your free 14-day trial. Trade alongside us. using the report, see how much money you can make during the 14-day free trial period. And with that being said, remember the system works if you work the system. So remember that bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Smash that like button. I'm out. Peace.